Matt Orton is now joining us, Chief Market Strategist at Raymond James Investment. Matt, good to have you with us here. Thank you very much. I'm going to start not with the US or India, but China. So many moves, and yesterday we got more moves from the government there, basically making homes more affordable in that sense, refinancing and first homes, etc., lower rates of first homes. And that's the big problem for China, which is property market, which is such a large sort of percentage of GDP, which has been stuck for a while. Is it enough, or you think these are just baby steps and a lot more is needed? And what does it mean? What we are interested really is, what does it mean for interest into China and kind of flows rotating back into that market?
Good morning, Prashant. Great to see you again. And I don't think this is enough from China. We've seen these piecemeal moves that the government has been putting out. And really what the government needs to do is they need some sort of bazooka to actually give the market confidence that they are going to do what's necessary to provide a backstop clear against any of the potential risks that are going to come from fallout from the real estate market. We know there's issues across a number of different regions in China. And so all of these different measures that have been rolled out, Sunday night we had a number of measures. Now we're getting this coming out with respect to the real estate market. They just need to stop with these small little moves and do something larger. So from an investment perspective, I still don't like China that much. We've spoken a lot about Asia ex-China being a favored region that I like, and I think that still continues to play out. There might be a tactical trade in China, but I still think there's better opportunities to play, especially given some recent weakness in South Korea or Taiwan, looking for supply chains continuing to move away from China. Philippines, Vietnam are beneficiaries of that. And then there's India as well. India has been a direct beneficiary of a lot of the movement out of China, and also investor, I'll say, disinterest in China and finding better opportunities in a country that's continuing to grow with the larger middle class. So when I have conversations with clients, it's interesting. They're actually asking questions about emerging markets for the first time in probably 4 or 5 years. And there's a lot more interest outside of China. And I think that's going to continue. So I think you want to be investing, not chasing any moves in China, but moving into Asia ex-China. And also India continues to be a top investment pick for me in emerging markets.
Okay, that's music to the ears of all our viewers, right? India continues to be the top investment pick for a company like yours. Got that. But Matt, what about the Indian markets do you like? Is it the consumption story? Is it the comeback that we're seeing in the IT stocks? Is it the financial inclusion, theme? If you can help us with some themes that the street can look at for the rest of the calendar year.
Yeah, that's a great question, Sonia. And I think it starts with market breadth. One of the challenges for the U.S. market earlier this year was a lack of market breadth. Sure, we had really, really strong, Magnificent Seven performance in some of the biggest IT or communication services names. But what I've liked about India, number one, was that valuations didn't seem extreme, but you had breadth between industrials, consumer discretionary. Even though there was weakness in IT, which is a larger sector, it was offset then by strength in financials as well. And so what I still like about India, even though banks have been going through some consolidation right now, I still think there's a lot of opportunities in autos, auto components. Playing that consumption story, like you mentioned, I think is a really important theme. And also this, from what we just talked about with China, is supply chains pivot and India starts to produce more of what the world wants. The amount of infrastructure spending that's going to be necessary to build that out over multiple decades is a very, very large number. We're talking trillions of dollars. And that's really what started the big bull market from China back in the early 2000s. I think we're in early innings in India, which is why ports, infrastructure, concrete materials, a lot of those sectors I think look interesting from a long-term perspective in India. And I think that also extends globally, even in the US. I like industrials as a sector generally because you're seeing fiscal support behind it. Just like in India, you're seeing fiscal support and government commitment behind this. And I think that provides a lot of legs for that trade. And so we're very early innings. And so that's one of the key reasons why I'm optimistic going forward.
All right. Hi, Matt. Good morning. Good to see you. And Matt, what are you making of the economic data that's coming out of the United States this week? There was some kind of cooling off in data, which is good news, right? Bad data coming out of the United States. Maybe that's not such a bad thing. How do you see the trajectory with regard to the Fed from here on? We got the big non-farm payrolls data later today. But what do you expect them to do? One more hike due, or do you think they're done?
I think we're done, Nigel. I think the Fed hiking cycle is done because the economic data is coming in softer than expected. And we are in this bad news is good news mode. And that actually concerns me a little bit. I think the rally we've seen in the market post-Jackson Hole was warranted because Powell basically said nothing new, which is good. He reaffirmed that rates are going to remain higher for longer and that he's data dependent. And so when the market rallied, the equity market was already oversold, treasuries were oversold, and so you've seen rates come off, equities move higher. But a big part of the moves this week have really been predicated on this bad news is good news theme. And I tell our clients, be careful what you wish for. You know, one of the biggest questions they've been asking me is, when are we done? And so I think we are done with this hiking cycle. But I think what investors in the market is underappreciating is that rates are going to remain higher for longer and that we're not going to cut interest rates next year, probably at least until the second half, and that's not priced into the market. So from a general perspective, you want to lean into higher quality companies. I think differentiation and dispersion is going to increase and become more important for picking winners and losers next year. And the rising tide is not going to lift all boats because eventually bad news is going to be bad news. With respect to later today, I think if it's a weak NFP print, the market's going to take off. But I emphasize to clients, don't chase the market higher. Pick your entry points, and there's plenty of good opportunities if you're patient and wait for it. And I think leaning into cyclicals is the way to go moving forward.
Okay, pick your entry point and look for many good options, especially in the Indian market. What stayed with me is that out of all the markets that you track, India is one of your favorites. I like that. Thanks a lot for joining in, Matt. Have a great weekend. And, thanks. Hope to see you again on CNBC-TV18 very soon. Okay, well, let's slip into a quick break on that note. On the other side of the break, our entire team will be with us to help us with the list of top 10 stocks. Stay tuned.